Why is it important for you to have a balance sheet as a small business owner? For one, it's one of the 3 financial statements that anyone who's invested in your business or giving you a loan would require from you. Hello, and welcome to Small Biz Catalyst. I am your host, Ayisat Abilogun. Join me as we explore ways that we as small business owners can pay ourselves a growing 6-figure salary without pulling out our hair. Whether you're a small business owner or an economic development professional, this show is for you. Let's explore together. Have you ever wondered if you could take a good look or picture of your business? If you wanted to know what you look like, of course, you could look in the mirror, but if you wanted to capture what you look like, you would take a picture at a given time. I know many times I dress up for a special occasion and I would take a picture to have something that I could look back on and say, oh, wow, that was really good. Or maybe sometimes I'm just having a really bad day and I just want to take a picture of that. I kind of want to remember the moment of what I look like at that time. Of course, those of you who have kids or even, nieces, nephews, or just family members that you cherish, from time to time, you take a picture of them, whether they're smiling or just joyous or happy or you're celebrating or maybe just being silly. And we capture those moments. As business owners, there is a tool to capture that moment, and it's called the balance sheet. Now, hopefully, all of you have balance sheets or you're keeping track of it. But I know some of us are not. And so for those of us who are not, I want to share this. The balance sheet is truly a tool that takes a picture of your business at a given moment. It's usually used alongside 2 other financial statements. One, the cash flow statement, which we talked about last week, and the income statement to get a true picture of your business. In this episode, I want to help us understand what the balance sheet represents and how we could use it as a tool in our business and why it's important. A balance sheet is a report of your company's assets, liabilities, and shareholders' equity at a specific point in time. And so a lot of companies, most companies would have a monthly balance sheet. And when we talk about assets, and let me give you a quick small equation. The balance sheet is basically your assets. There are 2 ways to work this formula. One is your assets equals all of your liabilities and the shareholder equity. Or another way to look at it is your assets minus all of your liabilities gives you the shareholders equity. So basically tells you what you own, what you owe, and what you truly have. So let's talk about the 3 categories of your balance sheet. And I feel like the balance sheet is like the easiest financial statements, the quick go-to financial statement. What are your assets? Your assets on your balance sheet is actually categorized into 2 sections. Your short-term assets and your long-term assets. Long-term assets are things that last over a year. Short-term assets are things that have less than a 1-year cycle, like your cash and pen and cash equivalents. That's all part of your assets. Your market securities, if you have any for your business. Accounts receivable, things that you would get paid, in a quick turnaround time or within that period. They're called your current assets. Your long-term assets are things like your fixed assets, like any machineries that you have for the business. That's an asset. Buildings. And if your business is sophisticated enough, you will have intangible assets. We will not dig into that this time, but if you guys request, we can have an episode about that. Hey there, if you're just joining us, this is Small Biz Catalyst. We would like to invite you into Tag a Business Team. Here's what you need to do. Nominate a small business of your choice, tag them on our website at smallbizcatalyst.org. That's small, BIZCATALYST.org. Tell us your name, give us your email address because that's how we'll be able to tell you if you're a winner or not. and then give us a website to a business of your choice. It could be your business or somebody else's. Once you've tagged the business, you'll be entered for a $25 drawing to a local business of your choice. We'll announce winners every month. And now, back to the show. Now, let's move on to your liabilities. Liabilities, basically anything your company owes. It also has two categories on your balance sheet. You've got the current liabilities and your long-term liabilities. Now, your current liabilities are things that you have to pay back within 12 months. So things like, your rent for the building or the office space that you have and you have to pay monthly. Those are short-term liabilities. Interest on the loan that you have to pay in a year, that's your current liabilities. If your customer paid you early for purchases that they haven't taken possession of and they will pay within a year, that's also part of your current liabilities because you do owe them that amount. You haven't really earned it yet. And that's a topic for another episode too. Accounts payable. Any accounts payable obligation that's due within 30 days of receipt, that's part of your current liabilities. Now, your long-term liabilities, those are debts that are over a year, like loans that you have to pay back past a year, maybe even things like if your business is big, large enough or sophisticated enough, you might even have like a pension fund liability, deferred tax liabilities, so taxes that you pay in over a year, those are long-term liabilities. And that's basically your assets and your liabilities. Now, let's talk about the third section or third piece of your balance sheet, not section, the third piece of your balance sheet, because your balance sheet actually has only two sides. One side is for assets, everything you own, and then the other side is for your liabilities and your equity. So let's talk about shareholder equity. This is money that is attributed as basically to the owners of your business. So shareholder equity is the money that is attributable to the owners of the business or its shareholders. So your shareholder equity is money that you can say, this is what I own in the business. And how did we come about that? When you take all that you actually have, when you take all that your business has, and you subtract all that you owe from it, whatever is left, it's what you truly own. And so it's sometimes known as net assets or shareholder equity. Now, your shareholder equities also has a piece that's known as the retained earnings. The retained earnings is what a company reinvests into the business. So say 1 year, your assets exceed your liability, and of course, the balance is your shareholders' equity. But the following year, the current year's assets over liabilities, whatever is left, that's your equity, right? But whatever you brought from previous years, those are called retained earnings. So over time, if you keep investing the money that the company makes back into the company, that's retained earnings. Why is it important for you to have a balance sheet as a small business owner? For one, it's one of the three financial statements that anyone who is invested in your business or giving you a loan would require from you. So your bank would require that, investors would require it, and it's just a good way for you to take a quick snapshot of your company and be able to understand what that is. It also helps you know or be able to calculate some ratios and measures in your business, such as your financial ratios, your liquidity and profitability, how solvent your business is. It's just really a good tool for you to even determine the creditworthiness of your business. Now, it's also good for those of you who actually offer shared employee ownership. If you want your employees to know how your company is doing, this is a good tool for you to be able to share that with them. The balance sheet has limitations, but I won't go much into that because we're going to be talking about a third financial statement the next time. But I hope this gives you a good idea of why you need to have a balance sheet. And I hope it also helps you understand what a balance sheet does for your business. Thank you for joining me on this episode. See you next time. Hey there, if you're just joining us, this is Small Biz Catalyst. We would like to invite you into our Tag a Business team. Here's what you need to do. Nominate a small business of your choice, tag them on our website at smallbizcatalyst.org. That's small, BIZCATALYST.org. Tell us your name, Give us your email address because that's how we'll be able to tell you if you're a winner or not. And then give us a website to a business of your choice. It could be your business or somebody else's. Once you've tagged the business, you'll be entered for a $25 drawing to a local business of your choice. We'll announce winners every month. And now, back to the show.